Hey everyone, welcome in to another daily editorial here on the KE Report. This is a special video interview as I am featuring OIII Mining and the president and CEO, Jose Vizquerra. Now, OIII Mining is traded on the TSX Venture Exchange under the symbol OIII and on the OTCQX under the symbol OIIIF. Now, I wanted to bring Jose on to this video interview because I think we need to explain a little bit better some of the projects and growth potential at especially the Marban project. We're going to do a few of these video interviews to bring everybody up to speed on the company and even walk through some of the slides that the company has. Now, in this interview, we're going to balance out some of the fundamental drivers, or I guess fundamental value that the company has within some of the PEAs that have already been released, then move a bit more into the catalysts for the company coming up. Now, Jose, first things first, let's talk about some of the fundamental value within OIII. Now, the company has a PEA out on the Marban project and at the Garrison project. Please share with us some of this fundamental value, which should, in a way, protect investors from downside risks because of what the numbers have come out of from these PEAs.
For sure, Corey. And one of the things that is very interesting, I'll share my screen here, is the fact that, as you well said, from a fundamental value standpoint of view, first of all, we have cash. And we have cash, as you can see in here, in the order of $120 million, $125 million. So it is extremely important to understand that when you build the fundamental value, the first thing that comes up is cash. And that's for a total, again, $130 million. On top of that, we have within that cash an investment that is within a company called Moneta Porcupine, where our Garrison project was reallocated. Just by doing that reallocation, we were able to increase the value of our project from $50 million to $54 million. On top of that comes what we have been able to build with regards to our projects. And in those lines is where we have our Marban project that already has a preliminary economic assessment with $423 million of value in terms of net present value at a 5% discount rate. And it's very interesting to say this because it is $423 million net present value unlevered. It does not include the fact that you could even finance the project. It is just assuming that everything will be equity. So this project has a lot of fundamental value.
Now, Jose, when it comes to fundamental value at current metals prices compared to where some of these PEAs were done, what can you share with us in terms of that? Also looking at some of the downside risks too, what some of that value would be if, say, the metals do trend lower here.
Well, fundamental value is a very important point for any company. And the way I look into fundamental value is what does the engineering is really telling us about this project? How solid is this project? There are many projects right now in terms of market cap that are talking about or are trading in the order of $300 million, $900 million, and they don't have a resource. Here, we already have a resource. 2/3 of these resources are already in measured and indicated category. We only have 1/3 of our resources which are not in that category. And we have, again, a preliminary economic assessment that shows, as we can see in here, a $423 million at a 5% discount rate at $1,450 per ounce. If we were talking about $1,750, we'll be talking about $700 million in terms of value. And if the gold price goes up and we end up around the 2000s, we're talking about a project that is almost $1 billion at a 5% discount rate. And in terms of internal rates of return, we're talking about 25% to 47%. And the paybacks, we're talking about a range between 4 years and 1.9 years. This is extremely good. When we compare these to other projects, this is a project that has a pretty low capex. And this is everything assuming that this is a standalone project. We're not even talking about here about synergies that can be explored in the district, like using other companies' mills or tailings. This is just assuming that we build everything by ourselves in our own ground.
So Jose, are you guys going to be updating any of these economics to maybe encapsulate some of these other opportunities or synergies that could happen in the market?
Yes, we will. We certainly are working on having a new resource by the end of the year for Marban in order to move to our pre-feas. Remember that the pre-feasibility studies can only be built with measured and indicated resources, not with inferred. The only time where you can use inferred is when you're working on a preliminary economic assessment. And that's why there is this perception of value with a preliminary economic assessment, which in our case is a pretty solid PEA because we have 2/3 of our resources already in measured and indicated. It makes it very, very unique. No?
Okay, let's talk about some of the catalysts then outside of updating some of these economics when it comes to drilling. The company has a large drill program ongoing, and you have continued to drill outside of some of these known resources. Can you take us through some of the past results outside of the known resources, and then we can get into where future drilling is going to come?
Absolutely. The best way to show results is with a map. And what a better way than to show it in a three-dimensional view. And one of the things that we have to understand is that all the resources that we were talking before are in these pits. So the 2.5 million ounces that we were talking for, Marban, are right in there. What is not in there are the results that are starting to get outside, like this ones, like this ones, like this one, like this ones. What is that really telling us? Is it telling us something really important? Well, we definitely think that. Because if you think, now the pit can be actually much bigger. Eventually, we can end up with a pit like this, where we'll even change the economics because of the engineering being changed. Now you can have different slopes. Now you can have suddenly different strip ratios, and that will be affecting the economics of the project. The same thing applies in here, in the area of Marban. This is for the open pit side of things. And the same thing applies here in Quirens. Look at this hole. This is already outside of Quirens, and yet it may be the case that this ties up together. So the opportunity to really grow the resources here, even beyond from where we are already, is still there. And that's what we have been doing for the past couple of months, which is drilling outside of the pits to maximize the value of these pits. And a very interesting part is that we're starting to realize that there is structures that actually continues like this. This is Agnico's ground. Our ground finishes here. But if something continues to come in here, you may end up having a much larger open pit. You never know. So the reality is that the potential that we're starting to demonstrate here it's quite interesting. I'll put it like this, and you will be able to understand that what you can have in here is very important, because what you have is other structures that goes like this, right? So now your pit can come this way.
So how much drilling is ongoing here to keep testing some of these potential extensions to these deposits?
We have 3 diamond drills constantly here drilling.
All working on this extension. How quickly can some of this be potentially brought into resources?
Well, we expect all the drilling that we're doing right now to add them to the resource that we're planning to have by the end of the year. So all this drilling that we have in here will be included in the resource, same as what's happening here and same what's happening here.
Okay. So a lot of expansion drilling right now that you have more or less, as you mentioned, these resources mostly in the more de-risk category, not so much in the inferred category, or not so much in the inferred category. Yeah, sorry. Now, what about a depth component too? Because let's quickly touch on that. A lot of the mines, a lot of the deposits in Quebec, they go down to quite a depth. I understand a lot of the OIII mining work is more shallow. Give us a little understanding here, please.
Yes. So one of the things, and you well said that. I'll show you a slide in here. What I want to say in here is that what we were talking before is essentially increasing here, kind of the pits, the extensions up in there. But one part that it is very important to mention is where can we finish if we end up finding a component for higher grade and underground. And in fact, we have this, which is the Camflo mine, where this is Yamana's ground, or better said, the Canadian Malartic ground, and this is O3. And this resource that is in there, or this pocket that we have of mineralization, could be a pocket of mineralization that extends down plunge. And why not to believe that it could extend to where La Ronde is, or where Lamac was, or where Goldex is? The fact of the matter is that there is high grade. There is a high grade component. We can see it in white and red. White being more than 5 grams per ton, in red being more than 10 grams per ton. And it really allows us to believe that, you know, there could be other structures that will, you know, continue to go at depth. So the opportunity that we have in here to maximize value due to the underground component, it's quite interesting. I think that there is quite a bit of potential there.
Okay, then in summary, then news flow wise, what should investors expect, especially on the expansion potential here with all the drilling that's ongoing?
The value proposition for investors is simple. There is a very clear gap between fundamental value and where we are. This is a project that if you invest right now and you have the patience, will be paid off, and there is no doubts about that. Again, the downside is well protected, but the upside is what we are really trying to show everyone. What we are doing is expanding the pits. So you will see a lot of our drilling going around the pits. We put a press release a couple of weeks ago on the open pit potential. We put another press release with regards to the underground, and those are the two things that are going to be the anchors of what we're building here.
Okay, perfect. Jose, thank you very much for your time. I hope this does answer some of the questions out there and to clarify a little bit of where that work is going. Again, Jose and I are going to do a few more of these video interviews, diving a bit more into some of the presentation and maps that the company has. If anybody has any follow-up questions or wants more information on any of the other projects, please email me, fleck@kereport.com. Jose and I will update you. Jose, I appreciate your time. Thank you again for sharing some of those maps and nuances with all of our audience.
Thank you very much for your time, Corey, and I'm more than happy to keep explaining our project to your audience.